Hello and welcome to my finance teacher. I hope you guys are having a nice Thursday and we are talking about the stock market. Specifically, we are looking at the weekly chart of S&P 500 and this week so far is turning out pretty good, pretty strong week, mostly because of what Powell says about data dependence on future rate hikes in relation to future rate hikes, but we'll return to that in a moment. For now, I want to mention that given this nice week has moved S&P 500 further away from 2600-ish or so, it just gives us a higher probability that this intermediate cycle lasting between February and end of October 2018 has probably finished. So as long as S&P 500 doesn't break below this recent low, which was at about 2604 or so. So as long as S&P 500 doesn't dip below that, we can state that we are most likely in a new intermediate cycle. New intermediate cycles start with an advancing phase, so we are likely to move up on S&P 500. Plus, we've seen this RSI sort of touch a little bit the oversold levels. That's a 10-week RSI, and that might be enough for this intermediate cycle low. That's actually more oversold than it was in February 2018 when we saw this another one of these drops, which was pretty scary as well. And another possible indication that we're out of this intermediate cycle and into the new one with the low behind us is this trend line, the downtrend line. If it gets broken, that is just another confirmation that the new intermediate cycle with its advancing phase is ongoing. Well, of course, as we saw in sort of middle of November, some weeks are going to give us red candles. There will be some resistance zones. The advancing phase will probably consist of a couple of shorter cycles, a couple of daily cycles. And these possible resistance zones are actually, I think, somewhere around 100-day moving average for S&P 500 or the 20-week moving average. This shows the 20-week moving average because that actually coincides with the 62% Fibonacci retracement of this downtrend, of this decline that we've experienced in the declining phase of that intermediate cycle. Either 38%, 50%, or 62% retracement, often either resistance or support zones, but in this case, the 62% retracement actually coincides with the 100-day or 20-week moving average. So that, I think, just gives us a higher probability that that's where S&P 500 might meet some resistance. But until then, you know what? I expect some positive movement from S&P 500 from the current 2737 all the way up to around maybe 2800 or so. After which we might get a couple of weeks of pull down, cool down, or pull down, whatever it is, and the continuation of the advancing phase of the intermediate cycle. In the short term, I am pretty positive on S&P 500. Plus, there were a couple of news recently, I want to talk about them, that also point to potential strength in S&P 500. For example, this weekend, there will be this G20 summit, and I think these two guys are both eager to, especially China, are kind of eager to strike some sort of a deal which might prove to be really, really positive for both markets. If we look at Shanghai Composite, for example, China's lost from the beginning of this year. So at the beginning of the year, Shanghai Composite was somewhere at around 3,300, and currently it is at the moment at about 2567. That's over 22% down this year, whereas S&P 500 is basically somewhere around where it did start the year. So not that much change year over year for S&P 500. So as I said, if this weekend some positive news comes out from the meetings, then that might be pretty good for both the Chinese and US markets. Moving on with the news, Powell recently came out stating that further rate hikes will be data dependent. So it looks like he is reacting to data rather than keeping his hawkishness, although some people say that he has blinked. And in his hawkish stand, he might react to a few indicators such as widening spreads on corporate credit, China's slowdown, and a lot of other indicators in his hawkishness. So, although for 19th of December it is pretty certain, the market gives it an 86% probability, it is pretty certain that the rates will be increased. The question is, how will the Fed talk about future rate hikes in 2019? The standard so far is for 3 rate hikes, I think. If instead they mention a possibility of 2, for example, that might also be pretty positive for the markets. So let's see if S&P 500 breaks, let's say 2900 by March, and I would actually be interested in your opinion. What do you guys think? Will S&P 500 be above 2900 by March? I think it is a pretty good probability that we might be somewhere around there in a few months. And for that reason, I still hold my triple Qs, QQQ, as I mentioned a few weeks ago. I got those at around the price of 71-ish, 71. So currently it's at about 167. So I am a little bit underwater on triple Qs, but I will only start thinking about selling it whenever either triple Q kind of closes on the recent highs, close to 190 or so, 188, or when RSI on S&P 500 will get somewhere closer to the overbought levels. So remember, this is not investment advice. This is for your entertainment and information purposes. And also remember that I'm not really that bullish on the markets long term, really long term, because we might get the declining phase of a long 4-year cycle somewhere near the second half of 2019, first half of 2020. I'm only interested in relatively medium-term gains over the next several months. So, if you would like to see S&P 500 above 2900 by March, remember to give this video a thumbs up and subscribe to the channel if you haven't. And as always, thanks for watching.